Okay, folks, welcome to Market Wrap for the 29th. All right, bonds. Before we go to bonds, let's talk about the market. I mentioned this a bit on the Closing Bell live stream that when you have a market, let's go to a valuation chart. All right, so we'll use the Schiller PE ratio. At current, we're at 35.72. We haven't been this high since the deflation of the dot-com bubble, that process. So we're very, very extended, far beyond where we were during the financial crisis at its peak, meaning the stock market at its peak. So when you're in an environment like this, where you have extreme valuations, it's a bubble. And that's okay to say, but it's not okay to ignore. And there will be an event, and I'm not saying what's occurring right now with the unwinding of a couple of hedge funds, a couple of banks are going to take it on the chin in terms of earnings. But these types of events have a chilling reaction on the market. And as I mentioned during the live stream, you'll hear more and more if this keeps going on and you have a ripple effect through this global system. Who has counterparty risk? Who is exposed? And many times people don't know. They're trading in complex derivatives. It takes a NASA rocket scientist to figure these things out. So when you're trading a derivative upon a derivative of a derivative, it takes a while to figure out, okay, who has counterparty risk? And that's exactly what you saw during the financial crisis. And again, I'm not trying to say that this is the pin that's pricking the bubble, but it's these types of events that have a chilling action on the market, and we shouldn't take them as just a simple headline news event and ignore. If we begin to see more and more of these, that's a trend. That is a series of events that I'm telling you right now, the overall market insiders are not going to ignore. So 2 weeks from now, today's events may be nothing, or it could have been the beginning of something. And I shouldn't say today's events. This has been going on since Friday. Let's go to the closing price action. Okay, to bonds. Bonds had a rough day today. Yields rose. We held the 136.45 mark, which is support on the TLT. Do we retest this lower band of support? Probably. Do we break it? Not quite sure. We are putting in higher lows on RSI. Volume to the downside was light, but it rose versus Friday. So the jury's out here. But weak issues, whether it be stocks, bonds, commodities, weak issues, when weak, tend to get weaker. When strong, they tend to get stronger. So right now, the path of least resistance remains down for bonds, up for yields. The tips. Took it on the chin today. RSI rolling over, Stokes rolling over. We hit resistance on Friday and we backed off. So what's strange here is that you have a lot of weakness in the tip market. I mean, this is a big move today. It's not insignificant, down a quarter of a percentage point more. Yet the gold stocks did very, very well. We'll talk about those in a moment. Because normally, the tip market and the gold stocks will trade in tandem. The dollar closed up today, closed right at its 200-day moving average. What is that anyway? 25.03, where do we close? Right there, right at the penny. Volume was not bad. It was about average, just shy. I would like to see some weakness here. But what's impressive is that you saw the dollar strong today, yields up today. What did the gold stocks do? They moved up higher. The VIX, very close to a spinning top formation, a sign of indecision. This is good for bulls. Manoj, if you're out there, this is good for you. We recaptured support that we gave up on Thursday. Stokes are hooking up. This is now very positive. These were not looking good for several weeks, and now they're beginning to look pretty good. So the VIX is certainly threatening a move higher here, which is not going to bode well for the S&P 500. The Dow Transports at 3:30 Eastern Standard Time, they were up. They then gave up the gains to close lower by a half percentage point. Volume light. Stokes are very extended. So warning flag on the track here. The trend is still up. The S&P 500 daily chart down slightly. Volume light. The Dow Jones, new all-time highs. Up just shy of a third of a percentage point. Volume is dropping off like a rock, folks. You don't want to see this when you're hitting all-time highs. That means that there are going to be some sellers moving in here, likely in the next couple of days, to book some profits. So beware. I mean, overall, it's still a good-looking chart, but we never want to ignore declining up volume. Think about it. Clear blue skies, no resistance above, yet there's no institutional demand. That's a problem. The trip Qs, down slightly on the day. I think that this was held up by the semi names, because names like Shopify down over 2.33% on the day. What else? Tesla down 1.2% on the day. Yet the Qs closed down slightly. So maybe we're putting in a higher low here, maybe not. So when do we decide if and when to cover our short? We watch for the breakout. And there you have it. Now, if we fail to hold support, this lower band here now becomes, it was resistance, this now becomes support. Just keep an eye on Stokes really weakening up here. RSI just can't close above 50. So while we close off the lows of the day, we're down slightly. I don't get the warm and fuzzies here. Volume is light. But we'll see what tomorrow brings. Could be wrong. Now, the small caps, of which we are short, they did exactly what we wanted them to do. I mean, Friday afternoon was not a wonderful close for short because we recaptured support. But today, it did exactly what we wanted it to do. It failed to hold. Breakout point failure, bull trap, call it what you will. It's just bad. So I think we're going to get lower lows here. You saw selling into the close. We closed down on volume. So beware the small caps. The banks, Buster Stacks is talking about getting short. We saw a rally up to the upper band of resistance. It failed a little bit. We did sell off into the close. Volume rose to about average. And as I mentioned to Buster Stacks, you know this market's in trouble when you get to both the small caps and the banks breaking support. At current, the banks are still strong, but the small caps, different story. Technology, down about a half percentage point. Stokes are hooking up. Not a horrible day with bonds pulling back and yields rising. I want to check out the semis. The semis, wow, very weak day today. I thought for sure they would follow through. So we have about another 2 days. If we don't get follow through to the upside after this bullish accumulation day on Friday, there's trouble out there. So this is an accumulation day. We have about 3 days to get a continuation breakout. Consumer discretionaries, Daily chart. Stokes weak. Still haven't broken down to a new lower low. We do have our higher low. Excuse me, our lower low. No break to a new lower low yet. Volume rolled in above average. Energy, a down day, a little over 1%. Surprising with yields rising as they did. Volume was light. That's understandable. So the feel I'm getting for this market is that we're really beginning to see some weakness here. Sectors that should go up, energy and the banks with rising yields, did not. Now, gold had a horrible day. Horrible day. Down over a percentage point. We're getting lower highs on RSI and Stokes. Very light down volume, though. The indicators do not look good. But where I am bullish, I have to say, man, the rally back on the gold mining stocks today was very impressive. More so on the mega cap names, but the GDXJ was down well over a percentage point on the day. But we managed to rally back to close above this support level. Stokes, they're hooking up above the 20 mark. That's very, very bullish. It means that you're not seeing a lot of sell momentum. Volume is very light. So that's good. Now, when you take a look at the NUGT, it actually closed up on the day with a bullish key reversal bar. Now, I'm still not comfortable with these Stokes. They're still well below the 50 mark. They're still declining. So I don't think we're going to go straight up from here. Maybe I'm wrong. But with these Stokes, I've traded the gold miners for a very, very long time. And rarely do you see them pull back and just simply hook up below 50 but above 20. It can happen, but it's rare. It happened back here, but that's after we came off of a very oversold condition. It happened back here, but then we rallied and rolled back over. So, warning flag here. I love the price action. Volume action could have been better. So let's not get lured into a false sense of security. Great price action. Indicators are still saying warning flag on the track, validated by volume, which was light. AGQ, silver, broke support today. So we're not going to add more here until we get a signal by the market. We do not have it. What might that signal look like? A down day bullish key reversal bar, or we gap up higher and close above $43 per share. Not $33, $43 per share. SILJ, another down day, but we rallied off the lows of the day, still trading down below the 200-day moving average. I would not buy here. Volume rose. That's not good. Gold money, down along with gold, no shock. This is just a watch right now and a hold. Cal-Maine Foods released earnings. They beat on revenues. They're down because of their input costs, meaning soybeans, whatever they're feeding their chickens, cost them more now. So you're seeing inflation hit the bottom line of Cal-Maine Foods. And that's why the shares pulled back. I still like them, though. They declared a dividend. They weren't paying a dividend. Now they're paying a dividend. So that's good stuff. So we may be looking to add more here fairly quick. Intercontinental Exchange, a down day by about a third of a percentage point, but we still closed above support. So we may be adding to this soon, assuming that the market doesn't fall apart. Taking a quick look at emerging markets, an inside day for the EDC. So no follow through on Friday's very positive price action. We pulled back. Why? Always look at the US dollar. Dollar up, EDC down. Usually, not always, but usually. BRZU down just shy of a half percentage point. No trade here. Rocket Mortgage, what a horrible price action today. A big move up, then faded. Never buy this stock in the morning. It always disappoints. here. Look at all these topping tails. I mean, it's littered, this chart with the topping tails. And with that, folks, I'm going to say have a great night. I'll talk to you tomorrow morning, and be well.